All right, so we are talking about incorporation, and the question clients often ask is, I have a sole proprietorship. Are there any risks to incorporating? So incorporating a sole proprietorship isn't as straightforward as you may think, and I want to ensure that you have all the crucial information. I hope this video will help you understand some of the things you will want to take into account when incorporating. So number one, determine if goodwill exists. Changing a sole proprietorship into a corporation can trigger capital gains tax personally. This is because the Canada Revenue Agency can deem you to have sold a business to yourself and can charge you tax on the implied goodwill. So goodwill might exist in your business when it has grown rapidly and is really profitable, branding, logos, and a reputation outside of yourself as a business owner, and has loyal customers or long-term contracts that sustain it. In addition, could it survive if you as a business owner were replaced? And does it have value over and above any physical asset? All of these are collectively known as goodwill and can pop up when your sole proprietorship has been successful. So before moving forward with incorporation, you're going to want to sit down and do some soul searching to determine if your business has goodwill. This might mean reaching out to a chartered professional accountant and a business valuation expert. So a successful client of mine had many of the factors listed above and did suspect of goodwill of being present in their business. They had grown rapidly, had great branding and a steady customer following, as well as a reputation for the business outside of the business owner. So after pursuing a business valuation, it was determined that the company did not have any value beyond the physical assets because profits were relatively low. So this came as a bit of a surprise, but it did mean less taxes and it was a bit easier to incorporate. It also gave the business owner peace of mind getting the valuation. So goodwill exists when you can sell your business for more than the value of the physical assets. You can estimate goodwill for yourself, but only a business valuation expert can give a dollar value range that will stand up to CRA scrutiny. So seeking valuation is very expensive, often starting around $5,000. So you want to carefully consider the goodwill factors I listed at the start of this video. Not all businesses will have goodwill, but it is something that you'll want to consider before proceeding with incorporation. If you forgo this step, the CRA can come back many years later after you've incorporated and determine a goodwill value for you. This could mean thousands of extra dollars in unpaid capital gains tax and a very nasty surprise. So if you suspect goodwill of existing in your business, please do your homework and due diligence before moving forward. So number two, fair value or cost. Next, you are going to want to determine the dollar value you will be moving your business assets into your corporation at. Assets include things like equipment, machinery, computers, furniture, vehicles, as well as intangibles like goodwill. You'll need to sell these from your sole proprietorship to your corporation and pay any tax that can arise. You must sell your assets at the corporation's fair market value, unless you choose to use the tax rollover provision of the Section 85. This is a surprise to many clients who assume that the cost approach was available without a Section 85 report. Taxes arise when the current fair market value is higher than the cost or the depreciated value of your assets. To determine your depreciated values, take a look at the asset schedules at the back of your T2125 Statement of Business Activities, available on your personal income tax return. So if the gap is too big for comfort, then consider using a Section 85 rollover election. What this does is defer tax consequences into the future. You'd pay for any changes in value upon the eventual sale of your business. So a Section 85 prepared by a chartered professional accountant is also very expensive, often starting around $5,000. And for small businesses, paying the tax may be the less expensive choice in the long run. If you don't use a Section 85 and gift your assets to your corporation or move them over at anything other than the fair market value, the CRA can reassess any values you transfer. Again, this can mean thousands of extra dollars in unpaid capital gains taxes and a very nasty surprise several years after incorporating. Bonus: estimating fair values and goodwill. So how do you estimate fair values? I get this question time and time again from clients looking to incorporate their sole proprietorships. I'd recommend taking a look at OptionSite and use good retail sites to come up with an average fair market value based on similar items. So be sure to consider your own industry experience and ask yourself if the fair values you've determined make sense given the condition of your equipment and your understanding of your industry. Now, for goodwill, you can do something similar, but proceed with caution. Goodwill is complex, and part art, part science. Start by looking for similar businesses for sale online. This can be hard to find, but it's a great baseline. Next, you may need to break out your calculator. A business valuation expert may use a profit multiplier, a revenue multiplier, or just consider the assets if goodwill isn't suspected. Again, use your industry experience to help evaluate if the number you're proposing is reasonable. As you're estimating values, please keep in mind that if formal valuation or Section 85 election isn't done, then the Canada Revenue Agency can always contest your fair market values and goodwill amounts. To help counteract this, be sure to have lots of good documentation available. This can mean leaving notes and memos to yourself on the approaches that you took, as well as taking screenshots and other printouts of information you're reviewing online. Now, the topic today has been very complex and may be a little bit outside your comfort zone. Don't be afraid to ask for help and reach out to a chartered professional accountant who can help you decide if a business valuation or a Section 85 is a good idea for your business. All right, that is all I have for today. I hope this video has helped you understand some of the things you will want to take into account when incorporating a successful sole proprietorship. Bye for now.